By quick way of introduction, my name's David Slater. I'm the head of consultancy at African Energy and the editor of our Nigeria Power Report 2021. And I'm joined by some of the authors of the report. We have Jon Marks, who's the editorial director at African Energy and the founder and chairman of African Energy's parent company, Cross Border Information. And we also have with us two of our analysts, Ajay, Ubhi and Marc Howard. So we spent a good few months conducting a lot of research on Nigeria and ended up producing what is quite a large report in excess of 200 pages. And I guess the size probably reflects not only Nigeria's status as the most populous country in Africa, and arguably the largest economy on the continent, but also probably the myriad issues and challenges facing the country's electricity sector. So it's long been said that Nigeria is too big to ignore, and as a country with a population which now is around 208 million, but only has 13 gigawatts of installed capacity, much of which can't generate all the electricity, can't be delivered to end users, it is obviously a market with huge potential. However, as most people know, the unfortunate reality is that there's been very little investment in new on-grid generation, as the vast number of issues facing the sector has deterred private sector investment somewhat. So our report looks in detail at these challenges and asks what progress is being made and what the outlook is, from the political and economic situation to regulation and policy direction, as well as the hydrocarbons industry, which may now be unblocked given the recent developments in the petroleum industry bill. And the report also looks at off-grid, the vast C&I market, and we present our own medium-term supply and demand outlook, which is built on our proprietary database of power generation projects called African Energy Live Data. So today we'll be discussing a few of the pertinent topics that the report covers. Before we dive in, let's very, very quickly explain the format. There'll be a panel discussion of about 20 to 25 minutes, and then around 15 minutes for a question and answer session at the end. Can anybody who has questions write them in the chat box in Zoom, and we will attempt to answer as many of them at the end as possible. You don't have to wait until the end to write down your questions. Please put them in the chat when they pop up in your head, and we'll keep a note of them. So without much further ado, and with I guess less of me nattering on, I'll turn to Jon, Ajay and Marc to discuss what's going on in Nigeria, because it does seem that despite my rather gloomy introduction, things are going on. There are developments. So perhaps we can begin by outlining some of the issues facing the sector and those issues which have deterred investment and hindered progress. So I very briefly mentioned earlier about the insufficient levels of installed capacity. So Ajay, perhaps you can provide a bit of detail around this and explain why this power is so constrained.
Yeah, sure. Thanks for that, David. I'll try and be as positive as I can after your introduction. I'll try and keep it somewhat brief as well. I mean, there's a lot of issues within the power sector, and there's a lot of moving parts. So I'll try and keep it to the main issues. I'm going to very quickly try and share my screen. Hopefully this works. We were just having a few issues with it just before we started. So if it doesn't work, we'll try. But if not, I can just talk through the numbers. So please let me know if you can see the screen.
Yep, it seems to be working.
Yep. Okay. So yeah, David, as you said, the power sector has had a large amount of unavailable capacity for a long time now, and it almost characterizes the power sector itself. So just to put some figures on the situation, the graph you can see, in 2020 there was around 14.5 gigawatts of installed capacity. Of that capacity, only around 6.1 gigawatts was actually mechanically available, and of that, only 3.3 gigawatts was actually generated. And the report that we produced looks at three of the main constraints behind that. So firstly, the aging infrastructure. I'm sorry, can you still see the graphs?
No, it's back. It's,
It's
we have Nigerian style intermittency here.
Yes.
I think I may stop the share just there, and I'll just talk through the numbers. So firstly, the main constraint that we looked at was aging infrastructure. So this is both in terms of generation assets and transmission distribution. Both, the large amount of capacity from the NIPP gas plants, which has been unavailable for a long time now, due to prolonged shutdowns and poor maintenance. And the transmission network has been constrained to around 7.3 gigawatts peak. So, and that's not actually how much is actually distributed, or sent to the distribution network itself. So the actual amount of power that is generated, transmitted, and then distributed is far, far below what is actually required. Secondly, you have the lack of gas supply. Now, the situation currently is far less acute in the Niger Delta than it was in 2016, 2017, but it's still somewhat of an issue. A large amount of the lack of gas supply is related to the tariff shortfalls, so the lack of liquidity within the sector, and the compounding of losses throughout the value chain has led to generation companies being unable to pay for gas supply, and a number of gas supply agreements not being in place for sufficient levels of gas for the power sector. And this leads on to probably the largest issue within the sector itself, and that's the lack of liquidity. Because of the poor performance of the distribution companies, the amount of bills and invoices they're able to collect has been far, far below what is actually required. And again, like I said, these losses have been compounded up the value chain, and discos have been unable to meet their invoices, unable to meet their remittances to MBET. MBET has failed to provide that to generation companies, and so on and so forth down the line. And the government is still required to provide a financial intervention to these financial shortfalls through the Central Bank of Nigeria. And it's estimated that the government spends some $1.7 billion a year funding these tariff shortfalls. So these are the three main things that we covered in the report. But beyond those three, really, what we're seeing in the Nigerian power sector now is years of failed reform. It seems as though Nigeria has been going through a process of reform for a number of years, and this latest reform is the latest reform that is going through now will have to be a lot more effective and a lot more efficient than the previous reform that has been going on. So those are some of the issues that we've been looking at, and yeah.
Right, thanks, Ajay. Just to unwrap a couple of bits of Nigerian power sector lingo for anyone who isn't familiar. The NIPPs, they're a series of gas-fired power projects built by the government. Started off about 15 years ago, and their failed attempts to privatise these assets, which aren't working particularly well, and some of them still haven't been finished. And the other one was NBET, the Nigerian Bulk Electricity Trading Company, is the single off-taker of power in Nigeria. A single off-taker which is heavily reliant on central bank support to be able to pay its the bills in for the power that it purchases from the generation companies. So, Ajay, you mentioned about the history of failure of reform. So after, I guess, there's been several false dawns and a privatization process about 7 or 8 years ago, which unfortunately seems to have laden the sector with even greater levels of debt. I think the impression we got from the research for our report was that it does seem as though there are now plans afoot to fix some of the issues that you've discussed, in a way which possibly is generating a bit more optimism than before. So perhaps focusing on distribution, which seems to be the real financial bottleneck in the electricity sector. Ajay, what would you say, what are the plans to resolve the financial challenges facing the distribution companies? Thinking particularly around tariffs, and how do you see this unfolding?
So there's two things really. So the first thing is the commitment by the government to remove the accumulation of tariff shortfalls by the end of this year, and the shift to a service-based tariff, which occurred last September in the latest MITO tariff, which is the multi-year tariff order of September last year. So what that means is that they kind of restructured the tariff, the customer structure within Nigeria. So rather than having set bands based on voltage, for example, they shifted to service-based. So what that means is the customer bands are now based on how much energy they use over a period of time. And the reason they did that was to provide some financial incentive to the discos or the distribution companies to improve their service level for certain customers in order to receive increased revenue from those higher bands. So that's the first part. So the commitment to raising tariffs by the end of the year and a shifting to to service-based tariffs. The second part is the ongoing plan with the World Bank as part of the power sector recovery operation. Which looks at removing the tariff shortfalls within the distribution companies. And the way that they are looking to do that is they've asked all the distribution companies to submit performance improvement plans. And what this essentially will do is figure out the revenue requirement within the sector for the distribution companies. And then they can use that to align the tariff and review the tariff going forward. Another part of the power sector recovery operation is to remove the tariff shortfalls from the distribution companies' books. So essentially, they'll be able to, without these liabilities, they'll be able to attract long-term investment and raise debt to improve their service provision in line with their service-based tariffs that they're now going forward. So these two things really work hand in hand. And it seems like a fairly joined-up approach to incentivize the discos to improve their service. Now, whether the distribution companies will be able to achieve all of that remains to be seen. There are some fairly, you could say, ambitious targets for the distribution companies to improve on, but I think this is the direction it needs to go in. And the power sector recovery operation is ongoing now, and it should run for the next 2 to 3 years. So we'll see what progress can be made on that, and the actual collection rates for distribution companies has improved since the service-based tariff came in. So there's encouraging signs on the tariff front still.
Thanks. So this is ultimately a way of both unsaddling the distribution companies of their debts, as well as allowing them to charge not necessarily cost-reflective tariffs, but charge higher amounts for the greater number of hours you're able to provide electricity for. So if your service is bad, you're penalized by collecting less revenue. Great, thanks very much, Ajay. So I guess the other half of the distribution question is, after the revenue issue and the collection issue, once distribution companies are then able to start making money that they can invest, what are they going to invest that in? Because this was obviously one of the big issues when the distribution companies were privatized. They expected to receive cost-reflective tariffs. They had ambitious plans to invest in improving the infrastructure. They didn't get cost-reflective tariffs. They didn't make money. They couldn't invest in infrastructure. So, Marc, perhaps you can provide us with some of the detail around the improvements that the distribution companies have planned, which I guess they hope will lead to greater cash flows themselves. I'm thinking initiatives such as the national metering program. How is that going, and how is that going to impact on the future of the disco's financial viability?
Thanks, David. Yeah, absolutely. The metering program is really crucial to the prospects of the whole industry because, as Ajay said, it's the discos that collect a vast bulk of the revenue across the whole sector. So if the discos are having revenue shortfalls, or if they're not meeting their settlement obligations to other players in the industry, that creates shortfalls all the way up the value chain. So this is crucially important. And just briefly to mention, with the SBT that Ajay was talking about, December 2020 was the best ever month for disco revenue collections. You saw 56 billion naira, or 148 million US dollars collected. And the grid offtake increased by some 20%. So this is, really promising reforms. There's definitely grounds for optimism there. So just moving on to the actual National Mass Metering Programme, NMMP. That actually commenced this month, and the goal is to install 4 million meters countrywide, and that's part of an overall goal by the federal government to install 6 million meters by the end of this program in 2023. Now, the interesting novel aspect of this program is that meters are sourced from local manufacturers rather than imported. And that's long been the norm, and the 11 discos distribution companies themselves are in charge of the sort of delivery rollout, if you like, the sort of last mile aspect of the program. Importantly, the meters are free of charge for customers. So the program is quite large in scale, as you can gather from the size. It's being funded by both the Central Bank of Nigeria and the World Bank, a finance package of 60 billion naira, or some 145 million US dollars. And essentially why meters are so crucial is that discos can then break out of the cycle, if you like, of underinvestment in infrastructure, which leads to low revenue generation. So there was a precursor phase 0 of the national program, and that commenced last August. Now, progress on this phase 0 has been sort of keenly watched by industry observers, because 1 million meters is quite a significant goal. In June 21, so just June this year, Ahmed Zakari, who's the President Buhari's special advisor on power and infrastructure, he said that 600,000 meters had been delivered to the discos, and of those 400,000 had been installed in customers' premises. So this represents just 60% of the stated target, although it is worth noting that COVID-19 related restrictions had hampered the achievement of this goal. And Zakari has promised, that this 1 million overall goal will be realised by the end of this month. Now, skeptics and some critics have said this isn't a realistic goal, and the slow implementation of the National Mass Metering Programme has been criticised by, among others, the Senate and other messy players. So the rationale behind the metering programme is really just to improve collection rates, as Ajay was discussing as well. So figures from the latest available figures from the Nigerian Electricity Regulatory Commission, or NERC, show that the average disco achieved billing and collection efficiency of just 74%, and that was in Q2 of last year. So clearly, up the whole value chain, it's imperative to increase collection efficiency. Another obvious benefit, and a huge benefit for customers in Nigeria, will be the fact that once more customers are metered, this should do away with the dreaded estimated bills, or estimated billing. So many customers' bills, NERC estimates some 60% are simply guesses or estimates that bear little relation to the actual consumption. Now, in terms of the metering gap, or how many people are unmetered at present, no one knows exactly. Previous estimates from both NERC and PwC supposed around 4 million, but the NERC subsequently revised estimates to around 7 million unmetered and 3 million people possessing out-of-date or malfunctioning meters as of March this year. So, you're seeing it's a gargantuan task, but any progress is good progress, because it creates obviously more collections, increase the revenue, it creates a virtuous cycle where you can invest more in infrastructure, down to the very quotidian level of replacing poles and distribution lines that have degraded. Even that creates more of an incentive for customers to pay their bills. And essentially, once customers receive more bills that are more reflective of their own usage, they'll be far more inclined to settle their bills with the disco. And then this sort of virtuous cycle then perpetuates itself. So yeah, that's the summary of the metering program itself.
Thanks very much, Mark. So I guess put together the rollout of meters, the more accurate collection of bills, and couple that with the more not cost reflective, but something closer to cost reflective tariffs, may put the distribution companies where they were hoping to be back in 2014 when the owners purchased these assets. So I guess we're only 7 or 8 years down the line, and 7 or 8 years more accumulated debt. But it's good to hear that hopefully I guess what is the most crucial area of the entire electricity sector is now moving in the right direction. So if there is, as we hope, as it seems to be, some flicker of light at the end of the tunnel for distribution, what about the other great constraint for the power sector, which is fuel supplies? Jon, what would you say is the outlook for gas in Nigeria? And can you tell us a little bit about the latest developments in I guess the very long-awaited petroleum industry bill, which has been on the drawing board for many, many years, and I guess whose delayed passage has probably caused a lot of issues itself. Where are we with that?
Well, indeed, the petroleum industry bill, the PIB, I suppose over many years I would have been amongst the PIB skeptics. PIB optimists have got fewer and been far between. I mean, we're talking about a piece of legislation and reform that's at least 20 years old. What the PIB's passing still has to be signed off by President Buhari. And so it's not an absolute given in 2018, as many of you know. They tried to, the Parliament had approved the governance elements of the PIB, and Buhari refused to sign off. This time it's kind of expected that he will sign eventually, either he's still in the UK or back in Nigeria. There's some really good things in the PIB that people will like. And I think there's a consensus in Nigeria amongst those that know that the most important elements surround gas. The actual expected mega upheaval of NNPC, the state giant, is critical for Nigeria's macroeconomy as well as its oil industry, but the fact remains that possibly the measures in the PIB as it is will fall a bit short, and that will take a long time. The new regulatory structures, the upstream regulator and particularly the downstream regulator, clearly are important. But let's go to the central factor. We're talking about Nigerian power. You being the power guys, you've started with distribution. But actually, let's go right into the upstream. Nigeria is going to remain dependent on gas for decades to come. And whatever kind of Western narratives and talk about renewable boom coming around COP, the fact is that the system can't very easily take renewables. We know that the transmission system has a long way to go until it will actually be able to support a lot more renewables on the national grid. So that's quite a long way off. And we also know that Nigeria has a lot of gas. Now, what the PIB does for the first time is it actually legislates for gas. It puts some of the ideas that were in previous gas master plans, because if there's something the Nigerian government has always loved, it's plans. As through your book, Dave, there are how many plans going over so many years and how little implementation there's been of them. But the PIB does give a structure in which investors could come. So that's the good news. Will those investors come? Well, we've got some of the drivers of why the PIB is being rushed through now, suggesting that they won't. The deal's going to have to be very good. Clearly, a driver of it finally being rushed through is that recognition that Africa is going to be covered with stranded hydrocarbons assets. Because even if countries are hungry to have gas for their domestic production, the oil companies who've led it, the majors, are not. You know, Nigeria is a story of divestment apart from some of the deep offshore assets, which work well from security basis, but also economically for the majors. But otherwise, a lot of responsibility is going to go on a range of indigenous and associated companies. Now, does the PIB offer enough? That we will see. On the positive side, that for companies who are looking to put gas into the Nigerian system, the PIB does have clauses actually dealing with gas pricing, and that's critical. As Ajay and Marc have been talking about before, the whole issue of cost-reflective tariffs, how it works, how do you actually put an industry on a commercial basis, as you've got with the chronic problems of the discos, are equally, of course, apparent in the upstream. There's been that disconnect between the amount that companies have been allowed to sell into the domestic market and what actually makes economic sense. So we'll see that. So I think that's important. Just one other point. I think that there's quite a lot of glass half full stuff here. And I think you have to say that institutions like NERC, have really worked hard to clean up a very bad act. It's been very difficult, but that half full really, the vessel remains leaky. So we're going to have to see continued progress. And the wider macroeconomic problems and the wider social problems really mean that the jury is out on where we're going to go. Come back to that point you made at the start, 208 million people. Finding an economy that can make that workable is very different. I think in the book we've got those forecasts that you've got around 80 million people at the moment, possibly living below the $1.90 poverty line, and by 2023, whatever happens, that could well be over 100 million. So that those numbers are extremely worrying, and I think that feeds into the industry. So it's good that a government that has been sclerotic around these reforms, and I think they've never quite sat easily with President Buhari himself, has been forced by the recognition of stranded assets, by the recognition of social pressures, by the need to bring more money into the sector, remembering we're talking about a country that even before you look at the very low percentage of non-hydrocarbons income the government gets, and then you look at the oil and gas income, it's not what it was. We're talking about one of the worst chronic tax collection systems in the world. So there's an awful lot of reforms. And I suspect that underlay, that macro underlay, is going to come and reflect when we go to the next part of the conversation, which I assume is going to be your excellent forecasts for generation, which are based on our African Energy Live database, which those that don't know has over 6,000 projects across the continent, but is based on analysis and entries project by project. So we actually look at the real what's happening in a project and actually try to assess whether, be it by 2020, 2021, 23, 25, whether that project's actually going to work. And when you look at that and you look at that kind of data, you're looking again at a not great picture. The net metering, the World Bank program is all really good. But I think my glass has just shifted from half full to half empty.
It's the leaks are getting greater. One very quick question on the gas. You mentioned the issues of cost reflectivity in distribution, but also in the gas supply. I think it was 10 years ago, the domestic market paid 50 cents per MBUT of gas. Today, that's around, I think it's $2.50 plus a 30-cent transportation fee. But the gas still isn't getting to the domestic market. It's still not getting to the power sector. Gas producers are still preferring to export. Is the PIB going to change it? Is the issue the cost of gas, or is the issue more upstream? Is it to do with greater production, or is it a combination of the two?
It's a great question. I think it is what the PIB is doing is creating a structure and posing questions that should have been posed 20 years ago. But the fact is, it's now is where it's at. Now, clearly you have got not by far not all of them, but some Nigerian indigenous companies, some of which have managed to raise money on international markets like Seplat. But but serious players who are creating a national industry where they can. I think what's interesting in some of the cases where they're linked to foreign markets is that the ability to raise money. And I think that's really where the problem's going to be. I mean, you mentioned the privatizations of the discos in that 2013, 2014 period. And one of the issues around that was the burden it put on the Nigerian banking sector for people actually borrowing that money to buy those assets, and then in issues that have not been resolved. And similarly, we did some work recently, didn't we, on indigenous oil companies. And the question of, there's a lot of assets out there. People have talked about the marginal fields round. People have looked at the divestments, particularly those shallow offshore and onshore assets, and lots of people bidding. But have they got the money? Is it the classic Nigerian thing that people get the asset and then look to trade it on? Or the asset's just left stranded in some cases for 20 years? And that is the big question, and whether the local market has the wherewithal to underpin it. And this comes in a particularly sticky period where some of the people that you would expect to be investing in a new, more dynamic, new generation indigenous industry actually can't, because carbon's become a dirty word for lenders. So I think the jury is out. There are opportunities. I think that deals and pricing are set to evolve. So, talking to quite a lot of the operators, they're looking at saying, it's not great, but it could well get a lot better, and we can actually structure deals so they work. But it does strike me that, as ever, we've got a promise of reform, and there's still a lot of questions. Another macro point, just if we're going to make it, let's mention the Naira. A really a marginal reform, in recent times, where the central bank back in April, May, very shyly put up on its website it was now going to use the NAFEX commercial rate rather than the old official exchange rate. Not actually a major policy announcement or anything as thundering as a ministerial speech, but a little note on a website. So there's movements in that direction, but the fact is the parallel rate is still out there. There's not enough Forex about, which is the huge issue. That come back to the point that Nigeria is not earning enough money. And in that environment, how solid are those investments going to be, and how many investors are going to come? Because there is a lot of potential, but I think, as we're seeing, potential and possible projects doesn't mean concrete delivery outside a group of, it would be unfair to call them the usual suspects, but people who have been able to deliver some projects, be they either indigenous companies or international Pan-African funds, that sort of thing.
Thanks. It sounds, a lot of the issues you just talked about are replicated in the power sector as well, particularly the issue around local finance. You mentioned, Nigerian banks are relatively liquid by continental standards, but as you say, their exposure to the power sector through the previous privatization is very high. So a lot of companies have struggled to raise finance locally, and they've also struggled to raise finance internationally to bankroll power projects, particularly while all these problems are making investments such high risk.
You lend to an insolvent company? Go and take that to your credit committee.
Exactly. Great, thanks. So Jon, you made the introduction to our forecast, so I'll very quickly throw over to Ajay.
And we didn't even script that, did we? It just natural segue.
exactly. There's not. Yep. I don't think there's much of a need for me here, is there? So yeah, AJ, why don't you show us this rather gloomy medium-term projection, if you can, if you're able to share your screen.
Yeah.
And would you be able to talk us through some of the numbers and the findings and what it all means?
I can certainly try again. If not, I'll do my best just to paint a picture with my words.
Oh, I can see it.
Yep, we can see that. Okay. So, as Jon has already said, we created this medium forecast for Nigeria, and really the overall picture doesn't really change too much from what we're seeing today. New capacity additions onto the grid are going to be fairly limited. And as Jon already said, we used our African Energy Live data platform to process and analyze the project pipeline up until 2025. On an asset level or project by project basis, we went through and looked at what is likely to come online and when. So from the graph, you can see that we're starting at around 14.5 gigawatts of installed capacity in 2020. By 2025, we expect to see this capacity increase to 18.3 gigawatts. A large amount of that is going to be coming from gas-fired generation and some rehabilitation and the construction of the final NIPP plant. And some large-scale hydro will be coming online in that time as well. And you can see that the mechanically available generation and actual generation still lags far behind what is actually needed in terms of demand. So you can see the red line at the top is the Transmission Company of Nigeria's projected demand. This is grid-based demand up until 2025. So you can see the huge gap between installed capacity, mechanical and actual generation going forward. There will be a slight increase in actual generation and mechanically available generation in 2023, as there is going to be some improvement to gas supply when there's when they finalise the construction of the AKK gas pipeline, which will add around 2 BCF to the gas to the domestic gas market. So really what we're looking at is not too huge a change in the picture that we're seeing. The prospect of new generation coming online is going to be fairly limited. Things like renewable IPPs are probably, or any privately developed generation is probably going to be fairly constrained until reform can be put through and the sector is made a little bit more stable and financially viable. We may not see any IPPs at all really in the next 4 to 5 years.
So, I mean, it comes across as a pretty bleak picture, but I guess perhaps what the government has moved towards now is, rather than focus on building more generation or try to encourage IPPs or other big initiatives like the NIPP program, it's focus on the crux of the issue, which is improve the financial viability of the discos, improve transmission capacity, try and improve gas supply, fix all these underlying issues. And once that's done, then we might see a lot more improvement in installed capacity.
Yeah, and like you said, the government doesn't seem to want to burden themselves with extra capacity to have to try and structure and bring online. So I think it was in 2019 that the former Power Works and Housing Minister, Randle-Marsh, said that the government wasn't looking to give any more guarantees or extra guarantees to new projects being developed. So from that point of view, and unless something has changed, obviously now Fashola isn't the Power Works and Housing Minister anymore. But unless something has changed on that front, then the government really isn't looking to bring any privately developed generation online until the sector is made stable. So instead of providing these guarantees and these expensive guarantees, they're just going to make the power sector more stable, and hopefully by doing that they'll attract naturally or organically attract the private investment back into Nigeria. But with that situation, it does really rely on how effectively and efficiently they can put forward these reforms and put through the reforms, and how stable it can make the generation going forward, actual in terms of actual generation, and then what is actually being able to be wheeled across the transmission network, and then what can be put through to the distribution network. So there's a lot of moving parts, interconnected parts to this. So it really needs to be on point. The government really needs to get a good grip on the reform and make sure it goes through. And that could take a number of years. And then only until that point, we may see some IPPs again in Nigeria.
Right, thank you. There seems to be a lack of activity in the chat. If anyone does have any questions, please do put them in. We don't actually have that long left. Unfortunately, we've been going on a bit. But if no one has anything...
There is a question, David, in the chat. Shall I read it to you?
Yes, please.
It's from Adam Fitzwilliam from Camco. He says, what role do you think franchising regulations will have in transformation of discos?
Who wants to have a go on the franchising?
I can kind of maybe talk through it a little bit. Maybe Marc has some more thoughts on it specifically, but for those who aren't aware of the initiative, so the regulator NERC has proposed that the distribution companies are able to use third-party companies to franchise their distribution network. So within the distribution area, a third party is then able to provide some of the service provision that a distribution company would normally do, and this would generate further revenue for them to improve their service provision. In terms of the prospect of that and then what role it might play, I think it does kind of depend on how viable the distribution companies can make themselves through this reform. Again, it all comes back to how efficiently this reform can be put through for the distribution companies. Because you may, as with everything that Nigeria has tried to do in terms of privatization and working with private companies, it's been a bit of a mixed bag in terms of who they can attract and to what level of technical ability that they can attract to these kinds of programs. So there's not been too much information in terms of the actual specifics of the initiative. So I think the regulator is not trying to be too restrictive on it. It's taking a fairly light-handed approach to it. So it's kind of letting the distribution companies come up with their own kind of creative proposals. And I think there was some talk of the generators within these franchises working within a 5 megawatt to 25 megawatt capacity in these cases. So yeah.
Thanks, Ajay. There have been examples where I'm not sure if it's a franchise or if it's the mini grid where consumers have been paying a much higher tariff for their electricity, and the collection rates have been extremely high. So I think there's probably optimism that this model could work. So that there is evidence that people are willing to pay more electricity for better service, better supply. I think when it comes to distribution companies, people tend to be a bit more of the view that there's a bit of history of poor service or getting electricity through, even though they're privatized assets, they're still largely viewed as public entities, and that this electricity should be delivered. So I think, from my view, I would assume that these franchising areas can help improve quality of supply, generate more revenue, and allow discos via these franchises to collect revenues themselves. There is another question So it's on the NIPPs. So it's Robert has asked that so the government is currently discussing divesting several Niger Delta Power Holding Company assets, which are the NIPPs. What's the likelihood of success? And does this undermine the government's credibility?
Do you want me to have a go?
Knock yourself out.
It's the government is confident in the in the Bureau of Public Enterprises that's been running it. They feel that this time they've got a better offering, and as many of you know, they released a tender some time ago for expressions of interest, and they were the BPE was pretty happy that they got over 30 expressions of interest, and they say that the quality of those who expressed interest was very much what they wanted. So we will see, because there's a very wide gap between an expression of interest and actually delivering a project. The cost of expression of interest was about $20,000, and then it gives another $20,000 for pre-qualification. So that kind of gives an indication of the that people have to be a bit interested. And there is some possibilities, and reverting to my previous intervention, the fact that the PIB includes gas in that offering does add to the potential attraction of the NIPPs. So we will see, but I think the process is going to carry on over the next few months. We'll see from who pre-qualifies what's there in the actual nature of the offer. I think you guys in the African Energy team over there know better than I do how we're forecasting, the number of NIPPs that are going to come on. So there will be some good news, and I suspect some disappointments in the whole process. But it is underway, and there is at least a process going on. But of course, we've had processes before.
Indeed. One not unrelated question that's just come in from F. Sekeso. It's asked, with large DFIs and international commercial banks looking to move away from funding thermal power, how do you see the growth in capacity being reasonably funded? Is there an answer?
Well, I think this is a great question, because I don't know, some of you may have seen the editorial I wrote in a couple of issues ago in African Energy about gas, and the issue that to some degree there's a degree of puritanical sentiment around renewables that is blocking developments on what is, after all, along with South America, the least polluting by far in terms of emissions continent. And indeed, you can argue that where a lot of those emissions come from are actually from burning forests and using diesel generators, when actually the rational use of gas for power generation and potentially industrial purposes could be made to work. But the very good question, very well phrased, is what is the chances of getting these things funded? I guess it depends on the funders, and I guess it depends on the way the project is structured. So if you look, for example, World Bank's IFC has always funded carbon projects and managed to get through its funding for the Tamane project in Mozambique, for the power station down there. And that, I believe, was based on a huge amount of hard work to get a coherent plan that could actually say, yes, we're using gas, but this is the reason that we're using it. Other people will probably take a more, some private equity people like that will take a more pragmatic view, but it's clearly not going to be easy, and gas needs to actually make an argument for itself to say, yes, of course we need the transition, yes, of course we need the renewables, but Nigeria needs this power and the system isn't going to be able to take it. And that will require people actually, right from the start of their project, doing some really serious policy work, articulating exactly why there is a development case. I think there's always, for the oil and gas industry, it's pretty hard to actually start with the development case, but I think people will need that so that they can mobilize money, and where that's happened and is happening, that's what you're seeing. But clearly the trend to put up virtual blanket bans on funding for anything that's got to do with carbon, no matter what the development benefits might be, clearly does exclude some pretty important players from the market. I mean, here we are, we're sitting in the UK, where the government has been pretty clear that you're not seeing, well, what used to be DFID type money and institutions that are linked to that, including those kind of CDC and the other private equity development finance institutions, are out of the game. And this is a really tough issue. So I guess people are going to have to really start from a policy perspective, and then we'll see where it goes from there.
Thank you. We are a little bit over, but there is one final question, a very quick one, around transmission. We've spoken about obviously distribution and gas, but we mentioned earlier the transmission networking is particularly constrained. So Marc, you looked at T&D in the report. Very briefly, what are your thoughts on the expansion of the transmission network? How do we see that unraveling over the next few years?
Yeah, so we know the transmission network is struggling. Losses were 7.4% this year, according to the Transmission Company of Nigeria. But that's an improvement. You know, from 2011 to 2016, losses hovered between 10 and 12%. So there is progress there. The good news is that the industry's determination to improve the network is really clear. TCN has made really commendable progress in rehabilitating the existing network. It recently launched what it's called Project Implementation Units, or PIUs, that are funded by the World Bank Group and the African Development Bank, among others. Now, these PIUs, TCN claimed, is going to boost the national grid by 4,000 megawatts of carrying capacity when fully operational, which is huge. There's also 3 major multilaterally or bilaterally backed initiatives in the works. So stage 1 of the Nigeria Transmission Expansion Project is underway, which is part of TCN's overarching expansion program. The goal is slightly more modest than previous initiatives that have been announced. And the firm goal at the moment is to expand to 10,000 megawatts of capacity by 2024. And that's also supported by the African Development Bank. There's also the Presidential Power Initiative, or PPI, which was previously known as the Nigeria Electrification Roadmap. And that's a bilateral partnership with Germany, and in particular, Siemens AG are heavily involved. And although there aren't firm timelines for the completion of each phase, it's a tri-phase program. Upgrades to the transmission network feature prominently across all 3 phases. In phase 1, you're seeing a 2,500 megawatt expansion. And by the end goal of phase 3 is expansion to 25,000 megawatts of capacity. And already Siemens Energy, I should say, is presently undertaking pre-engineering works and engineering designs for transmission substations, etc., etc. And lastly, there's the World Bank Group's Nigeria Electricity Transmission Project, which is going to upgrade and rehabilitate 48 existing substations. So in total, that's going to be 1,200 kilometers of transmission lines. upgraded. So these are really promising reform efforts. You could argue long overdue, but I think they're testament as well to some of the sterling work that TCN has been doing in the last couple of years. And it shouldn't be forgotten that not all of the transmission networks problems are solely matters to the energy industry. We've seen pervasive insecurity in the northeast of the country in particular, have meant that transmission infrastructure has been targeted by Boko Haram insurgents, among others. So there are myriad challenges that TCN faces, but there are certainly grounds for optimism, and particularly the programs that it's engaged in with multilateral and bilateral partners, holds great promise for the transmission network to increase its admittedly quite poor performance within the next 5 to 10 years.
Thank you. So it seems, as we sort of started the webinar by saying, there are plans afoot within distribution, gas supply, transmission. The plans are there. So as we wrap up, I'm afraid we're out of time now, but any questions that weren't answered, we will reply to you by email with our thoughts on those. So can I very quickly wrap this up by asking the panel a quick question? I think we already know Jon's answer to this. The Nigerian power sector and its outlook, is your glass half empty or half full, Ajay, or is it completely empty?
Well, I think naturally I'm an optimist, so maybe I'll go for a half full.
Maybe.
But like I said, it all comes down to how effectively they can put through reform. So we've been here before, but I'll be optimistic.
Certainly, there's a lot of unknowns and a lot still to be seen. Jon, is your glass still leaking? Is there any liquid left in it?
When I look at official Nigeria, my glass leaks very substantially. But there are also good people in BPE, places like that, who are doing their best. Where I feel a little bit more positive, and we haven't discussed it on this call, is that the Nigerian business class and generally the generational changes in the country are producing a lot of talented people who are ready to do business, and you're actually seeing where people are allowed scope to do their own developments and do their own thing, then you get some positive. We haven't talked about the whole commercial industrial front, the C&I, which I know you've spent a long time working on that, Dave. But basically, that is kind of positive. But I'm going to say it's positive. It's Africa's largest economy, its biggest population. The place has an absolute dynamic, but the level of persistent problems, I'd have to say my glass remains half empty. But it's Nigeria. It's one hell of a big glass.
It is. Marc, the final word. How full's your glass, or how empty is your glass?
So mine's definitely half full, but I'm going to wait a couple of years, see if I buy another round to stretch the metaphor a bit further.
Excellent. Right, well, thank you all. Thank you, Jon, Ajay, and Marc, for your insight and analysis, and obviously thank you to everyone who's joined us today. We'll be in touch to provide you with some information about the key findings of our new report, and if anyone would like to access the report, then please do contact us. We'll send you across our details. So thank you all again, and we look forward to seeing you in the future for hopefully the launch of our next report. Thank you all.